Hi, I'm Peter Rose, founder of Longwood Currency Trading. How to make big gains on a Forex price runner. What's a price runner? Well, that's when you've got price moving in one direction and it's tracking really hot, and let's say it's going up considerably. That's a runner. It's running away. Well, the definition is that the sizes of the candles that are being painted and the continuation of a series of those candles, that's a runner. That's price that's running away. There's a lot of buying activity, for example, or selling activity, but we'll talk about the long side. There's a lot of buying activity, and that price is just going like crazy. So how do you make big gains on something like that? So the problem is that our intuitive nature as human beings in trading is to let a loser run. We know how to do that real well. But then when we start making some money and the price is moving in our direction, we get fearful and we don't want to lose any of those gains. It doesn't happen in some of the things that you may be more aware of, like playing poker. You say, "Oh, I'm making a lot of money here. I'm going to pull my chips off the table. I've won." You can't pull your chips off the table until the hand is over, even if you've already committed to it. You're in. In currency trading, you put a trade on and you have a running position, you can jerk that off there anytime you want. And because you're afraid of losing those profits, you're going to clip that early. More often than not, you're going to clip it early. I mean, that's just the way we're wired up. The obvious solution to that is that you have profit targets and you don't clear until the profit target is hit. But that's stupid, because the price action and the order flow don't know that that's your profit target. If you say, I've always said, I won't take a trade unless there's at least 20 to 30 pips of runway there, real estate available for that price to run if it gets going. Well, what is the probability that it's going to run 20 pips before it has a retracement? Well, if you're trading on a 5-minute chart, you're looking at 4 or 5-minute bars on a run to make that 20 pips. It's more likely that you'll get a 5-pip rise, and then a 2-pip rise, and then a 3 or 4 pip decline as the bars chatter up and down. And so how do you know when that thing turns around on a retracement, whether that's going to go back to go back to your entry area or hit your stop if you've been trailing stop or whatever you're doing? Well, you really don't know. And so there's the conundrum of saying, oh man, this thing has gone 10 pips, 12 pips. I'm just going to get out because, why? Because it's Tuesday, or I got a boil on my ass, or what? Well, why are you going to get out? You get out because you're afraid of losing the profits. You don't have any profits until you close that trade. And that's why you're looking to close that trade early, because you want those profits. Any profits, because that makes you feel good. I'm a hero, I made 3 pips. Great. Last time you traded, you lost 25. And time before that, you lost 15. Then you won 3, and then you won 6. There was a study of 43 million transactions by 25,000 traders from a brokerage outfit, a major Forex broker. And they found that though 90% of the traders lost 90% of their money in 90 days, the majority of the trades that they made, 72% of the trades that they made, were profitable. And the other 28 or whatever percent there was were losers. The problem was that the losers far, far exceeded what the winners were. Why? Because you let your losers run and you cut your winners short. And so if we're going to be talking about how to make big gains from a runner, you have to figure out some way to wire yourself up with rules and situations in order to say, this may be a runner, and I'm going to let it go. So what I want to do today, and I'm actually going to get on the whiteboard, and we're going to take a look at this stuff, because we need to define what a runner is. Is this price a runner, and what do we do in the interim in order to create some rules that prevent us from cutting that trade short. So I'm going to fill my coffee cup again, and we'll see you in the library on the whiteboard. All right. Rather than writing it out as I'm talking, I've already done the scenario that we're going to be talking about as far as a runner. So there's 4 questions that we need to ask first, or that we're going to answer through the analysis here. Number 1, is it a runner? Number 2, you got to evaluate the momentum. In other words, how much juice does the price have in order to get the distance? What's the estimated distance that the runner has that it could go? And then you determine whether you're going to trail a stop, or if you're going to use a staging, and then you got to deal with the number of lots you're going to stage, the levels you're going to stage them at, and where the stop distance is, so that you don't kill yourself and lose money on a good runner because you've staged in too much. Okay, so let's start it out. Here's our little price action, and this is where price is right now. Boom. So, is it a runner? Well, if we determine that it could be, and we go in and continue to hold that price, what's price going to do? It could either go up and be a runner, or it's going to flip around and go below, oh, here's a phony support line, or a level, what we call a level. So it could fall below that. Now, it could turn around and come back up. We'd have another chance to take a look at it. Or it could continue to fall. Well, we know, like a 60% chance, if you know anything about order flow and what's happening, that if this level is like a boxed resistance line, then because there's a lot of people that are thinking, well, it hit this level 18 times, and so it's going to hit the level and it's going to go down. Oops, it didn't, it went up. Well, that means there's going to be a lot of people that are wrong, and so they're going to sell because they went short here, right? And so their short is here. It goes up here. They gotta buy their short back. So when they buy it back, it's gonna create this mess of a thing, because there's a lot of people buying, and these people are selling into it, and so you're going to get a pullback, because you get a lot of people that all of a sudden want to sell because they were wrong, and they override the number of people that were right and saying, you know, we want to buy this, we want to carry it on, and so the price will retrace back in here, and then many times it'll turn around and flip over. The Forex market is really the only market where this particular type of you'll see this action come. If you're in stocks or commodities and you get a break like that, more often than not, that's a good solid break, and it's going to continue on. If you don't understand order flow, you don't get that conundrum, but you have to take it into consideration. So, is it a runner? Well, we're gonna say that because of this stuff and the weakness of this, yeah, we're gonna say that's a potential runner. So let's use the evaluation of the momentum to see how strong this poke out is. So here I've drawn some candles, right? We're going to be on a 5-minute chart with an ATR of 5. So we got our first candle, which is going to be, you know, like in here somewhere, and the distance of this candle is 5. The ATR is 5. Then you get this next candle, and that's another 5er. When you get this next candle, it's 8 pips, and then you get this next one, and it's 12. So you've got this increasing candle size in relationship to the ATR. So this means that there's more orders coming in. There's more order flow coming in to the market at this particular time. And so therefore, will this continue? Well, it's been a gradual increase, and so we've got some buying and stuff going on. If you had if you're looking at 1-minute candles, you'd see that you'd get some 1 minutes that are coming down and doing this, and eventually 5 of those add up to a 5-minute candle, and you get the overall movement upward. So it means that these small interactions at the 5-second and 1-minute level are not strong enough to overcome the order flow that's pushing that up. So we've got the momentum, we've got a breakthrough of some cluster of stuff that's going on here. So it's a runner. So is it a runner? Yeah, it's a runner. So is it a runner? Yep. We evaluate the momentum. We confirm that it has run and it's got the momentum to continue going. Now, how far is it going to go? That's the next thing you have to determine. You use the same principles of estimating this distance as you do in your entry analysis. Remember, at this stage, we're in position management of the life cycle of a currency pair, right? We've got entry analysis, position management, and exit methodology. So we're solidly into position management here. We the trade was entered maybe somewhere down here, or maybe we're thinking it might be an entry thing. The issue is that most likely we've been in the trade through this long, and now we've got this breakout and the price is here. This is not an entry price. This is a current price where we have an open position. We've gotten in here. That's where we're in, and so we've got this much of gain right now on the position. Is it going to continue? Question mark. Yes, we think that it is. Well, how far up is it going to go? That's the next question. How far up on the scale is that going to go? So we did entry analysis here to get into this position, to go long, and now the price has done what we thought it was going to do. It's here. Now, does it have the, and it's, by the way, this is our 20 pips that we looked for. We were here, we said, oh, this looks like it could go 20 pips, and we've got this 20 pips. We've got it. That's 20 pips, and we're excited about that. So, because you got your 20 pips, and you're running a 10 lot here, at 200 or $100 a pip, you're $2,000 up. So the tendency is going to be, oh, I'm going to capture that $2,000. Don't. It doesn't belong to you yet. Let's say you're going to put your stop down here so that you'll get 5 pips of that. If this collapses and goes back, you'll get 5 pips. Okay, that's not bad. You got a 10 lot, so you're $100 a pip. You make $500 on a $100,000 risk, or whatever money you need to carry 10 lots. You could probably carry 10 lots for $6,000 or $7,000, but or $60,000 or $70,000 instead of $100,000. So you've protected that with maybe you're going to make $5 on a mini account. I mean, I don't know what you're trading, but you protect that with 3 pips or 5 pips or whatever. These don't belong to you because this is a runner. You got to be willing to run with it when you get an opportunity, because if it goes up here, which could be 60 pips, this distance up here, let's just say that we've calculated that this is the next one of these guys, right? And so this could be 60 pips. You got a 10 lot, you're 100 on that, that's a $6,000 run. So you don't want to pass that up. So the bet structure is, am I willing to try for 60 pips, but guarantee myself making 3 if everything goes to shit? So if you're trading a mini lot at $1 a pip, you're going to say, I'm willing to risk making $60 with a $3 risk. I'll make $3, but let's see if it goes to 60. Well, yeah, but it's already 20 pips up. I'm $20 up. Yeah. But how are you going to get to 60 if you get out there? How are you ever going to be able to do that? You're not. So what rule do you have? The rule is set this protective stop down here. Don't set it up here tight, because you don't want to get knocked out. This thing is gonna, you know, it's gonna gyrate. It's gonna go up 6 or 8 pips and come down 10 or whatever. So when you initially make the determination you're gonna stay with that price, bring the stop up so this swing down doesn't take you out and gives it an opportunity to continue on and to go up. So now we're into we've got this distance estimated. Now, determine what you want to do. So the two questions that you have here, are you going to just trail your stop? Question mark. Or are you going to stage? In my opinion, if you're trading less than 5 lots, you shouldn't be investigating staging. And I'm not talking about 5 minis. You know, if you do consulting with me, I'll explain all that to you. But I'm just going to talk openly. You do whatever you want to do. So your decision at this point, are you going to trail your stop or are you going to start staging? If you're going to start staging, you have questions to ask yourself. How many lots are you going to stage as this thing moves up? Are you going to stage 1 lot at a time, 2 lots at a time, 5 lots at a time? Well, your target here is 60 pips, and you're going to say, you know, if it gets anywhere near there, I'll probably roll out. So I don't think I want to be staging lots in 5 pips away from my 60 pip if I'm going to trail a 10 pip stop, because that guy's going to get taken out. And I'm going to lose, if I'm staging 5 lots at a time, I'm going to lose $50 a pip times 5. I'm going to lose $250 just by putting that last thing stupidly in there. So you have to have how many lots you're going to stage, what levels are you going to stage them at, and where are you going to put your stop distance for that. And there's an intricate balance mathematically between where the current price is, where the average position value is, the number of lots that you're staging, and all that sort of stuff. I do a whole class on that. And in my advanced solutions part of my course, we go into this kind of scenario here about the staging. But that's really immaterial to the discussion of this video, which is simply how to make big gains on a Forex price runner. So, number one, you have to determine, is it a runner? It looks like a runner because it's done something. What's the momentum of it? That's the calculation that you have to look at, and you kind of just, I have to eyeball it. There's some math that goes in to do this, and some probabilistic analysis, but you don't have to worry about that. Look at the friggin' candles and determine whether they're increasing above the current ATR or they're not, which would mean that you have sustained momentum, right? Momentum. That's the critical term. The next thing, once you've determined that this thing is a runner and it's got the momentum to continue on, well, where's the next logical point that it could continue on? And you don't really, you can set this through some kind of structure up here, or you can set it as a function of the momentum. There's some intricate math that goes along with doing that. I have a descriptive way that I do that. You just can't base it on the candle size. There's a hell of a lot more to it than that. I'm just giving you the bones of this thing. But you're going to evaluate that then based on the momentum as to whether it has the momentum to get to the 60 pips, even though the 60 pips is structurally there, doesn't have the momentum to get there. So there's a math, a balance that's going to go on there. So you're estimating the distance. And the next thing you're going to do is, well, how are you going to protect as much of that as you can without getting tagged out too early? And it becomes a particularly critical issue of where you're setting your stop as you're trailing behind, as you're staging lots in. That's why I don't advise that you stage lots in until you're trading 5 full lot or an 8 full lot load. because if you're trying to do this on mini lots, it just means you're trying to make money, and you can't make money trading minis. You're supposed to be learning your craft. If you're not trading full lot accounts, you're not trading to make money. You're trading to learn your craft. Don't fucking try to take small accounts and make big accounts out of them. Don't try to take $500 and run that to $5,000 or $500. Just don't do $600. Don't try to do that, because you're not going to be able to take a $10,000 account or well, maybe 10,000. You continue to do that, but you're not going to be able to take, for example, a $50,000 account and run that to 500,000. There are just too many factors involved in doing that. I've got 280 videos out there. There's many of them that deal with these issues, and some things that have happened very badly to me in not appreciating that particular type of scenario. So, how do you make big gains on a Forex price runner? You do it by making sure that the price is a runner, by following this menu. And then you're in position management, and then you as to how you're going to manage that, how much you're going to take a look at these temporary pullbacks. As this thing goes down or continues to go up, they're going to be pullbacks. You don't want to be staging a lot in here, 5 lots, and then have this thing swing around, because that's a negative $250 to you. So you got to be careful about that. So there's the bones of it. If you got any questions on this, send me an email. I appreciate your comments as well. But if you need to contact me, the only way to get a hold of me really is through that email address. I'm not on any other platforms, so don't listen to any of these fools that are trying to put my picture up there and pretend they're me and WhatsApp me and DM me and go to a Facebook group or whatever the hell they're trying to tell you to do. That's not the case. If you get an email from me, that's from me. Okay? infodesk@longwoodcurrencytrading.com. Take a look at this thing. Watch this video again. If you got any questions, throw me an email. We can sort out the issues that you may have. Thanks for watching. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.